The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Lewis. Feeling good, Lewis. No, looking good, Billy Ray. Feeling good, Lewis. Let's get it right. Well, we're going to start out with the DAX like we always do. As you can see, we had a big move up in the DAX. Was due to some type of economic something coming in from Germany, probably that they're going to bring in more refugees to stimulate their economy, whatever it happens to be. It did went up to the 786, but whether it's going to hold that level or not, we'll have to wait and see. Well, we have to thank our good friends Basil Chapman and Norm Winsky for setting the record straight on the low in the Dow in 1932. I'm going to post it. This is from the paper, folks. July the 8th, 1932. This is the whole month. You'll notice the little red arrow there. Norm has been able to point that out to us. The actual low in the Dow was 40.56. The high that occurred on September the 3rd, 1927. Wow, Larry, let's try that again. September 3rd, 1929 was at 383 and change. I don't remember. Now, why I said it was the 5th is because you'll notice there's a similarities between a 5 and an 8. In my Gartley book, and all the charts are so dog-eared after all these years that some of the numbers off of the 5 had disappeared, or off the 8 had disappeared, and it looked like a 5. And that's what the problem was. Now, I had not been doing it. I got the Gartley book in 1970 from Don Mack at the Investment Center bookstore in Santa Monica when I was trading out of Conti Commodities. And he told me it was the best book, and he said it's the most expensive book that he had, and he let me borrow it. And of course, I didn't realize the importance of it till about 4 years later. But it was really, I didn't get into the astrology part until the mid six. Well, I looked a little bit at it during the 80s when I was at 70s and 80s when I was at Drexel, but very little. But in 86, I started looking at it really heavily, and many of the dates that we looked at for key dates would come out of the Gartley book because he had stuff going back to 1875 that we could really see quickly. So that's the difference. So the difference in price was about $1.60. So that was the bottom. What people don't realize is that during that move down, in the Dow from 1929 to 1932, 16 of the Dow stocks went bankrupt. I believe during the Depression era between 32 and 38, I believe, I'm not sure of this, I could get this from the book only yesterday, but I believe American Telephone went bankrupt several times. Now remember, this was an era when we were having some of the greatest inventions that we had ever had in the history of our country. We had electricity coming into being very, very heavily. We also had the start of air conditioning. That's why they were able to build the Empire State Building. The other reason is they had the telephone and, of course, the automobile. During the 29 high, there were 2,000 auto companies across the country, if you can believe that. And that was a lot of them. So anyway, we'll take a look at it. We got a couple of trade setups going on right now, folks. Let's get down to business. First of all, something we've been watching for quite some time is the oil market. This is what we looked at yesterday. We're just going to walk you through what we're seeing from last night and today. You'll notice that we're looking down here right around this $51 per barrel level. That's what we were watching. If we take this just a little bit, blow it up macroscopically, you're going to see here what's happening. We'll put this up. Now, these are all short term, but this is how you keep your risk down to a very, very small amount. You'll notice here that after we made that ABCD into early January up there at that $55 a barrel level, and then you backed off to this 786 last night. They came in at 50.80. Now, what happened after that is very interesting, because this is what I look at as these numbers get down very, very closely. I like to be able to sort of keep a close eye, go into the microscope and take a look at it. And here's what you'll be seeing. In fact, we've had a pretty good move here just recently, at least from a short-term standpoint. You'll notice that after we hit that 50.80 level, the market rallied about 60 pips. It got up there and then it backed off to exactly a 61% retracement, and then it had the rally up to that next level of 51.40. And that's 60 pips, but in crude oil, that's $600. That's equivalent to 12 handles in the S&P. So that's a big thing to look at. And since that time, of course, we backed off one more time and then took off. So this is a really important number down here at 50.70. So if we get below that, boys, crude oil's got big trouble. But until that happens, it looks like it has a possibility of wanting to see what's going on, with the oil. So we'll see. Now you're going to get a lot of reports out of the Saudi Arabia and other places about, cutting production or whatever. But, I'm a fundamentalist, folks, of which I am not. I am a technician, and I don't listen to those dudes. Every time I have, they seem to try to get in and pick your pocket. So the one thing that you can be sure of when you're doing technical analysis is the charts will get you to the promised land, because they are the sum total of all the buyers and sellers of things that you're looking at. There is something interesting happening in the foreign exchange market, something that I hardly ever trade, and hardly ever is the understatement, and that is that the Mexican peso is almost at 4% to the dollar, folks. This is a big deal that's going on down here. I believe it's about 5% right now. It's almost at 22 times pesos to the dollar. I can remember, back in 1976, it was at 7, and this was a big deal because they were offering interest rates in Tijuana, Mexico, for Californians to come in, and they could get 22% interest on their money. And you'll never guess what happened. They still got 22% on their money, but they cut the money in half. So they lost half their money just in the devaluation. And now we're up here at this level. Pretty soon they're going to have to do something, because this is pretty serious over here. But we'll wait and see what they decide to do. There are some big things happening also with the Chinese renminbi. If we get the renminbi above 7, it's 6.9 and change right now, and if it gets above 7.5, that's going to be another sign that China is having some problems in their foreign exchange settlements. So that'll be another thing that's going on. We'll cover the dollar first, but we've got another pattern coming up here that we're probably not going to be able to cover as we get to the break here, but we're going to start with it because we wanted to walk through this, because this has been one that has been very, very interesting, and that is the British pound. And we want to talk about that as we get closer, and we're going to have the break here in just a minute. So when we get back from the break, we're going to take a look at this British pound here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we are going to take a look here at this Australian dollar. As you can see, as we were coming into this week, we had a chance on Monday to hold at the 78% level. As you can see, we held there for about 3 hours, and then we started to head down. Once we went below the 122.50 level, it set up an objective at least 150 pips lower, and that's in fact what we did get to. Now, what we're doing now is we're looking at this 4-hour chart. So I'm going to just show you what it looks like when you look at it under a microscope, because it looks a whole lot different when you're looking at it in a different time frame. Because if you look at it on a 15-minute time frame, you get the last several days action, and you'll be able to see that we in fact have made a 3-drive to a bottom pattern. As a matter of fact, we made a double bottom down there. You can see on the far right where this morning we made a slightly lower low by 1 pip than we did last night's low. So that's a sign that there's a possibility of getting a pretty good rally. Now, these are short-term moves, folks. These are things that you're looking for somewhere between $300 and $500. That's somewhere between, 50 and 100 pips in the British pound, but it moves quite a bit. As you can see, last night we had a 100 pip move from the low of yesterday at 2100. We went up to 2200, and that was 100 pips, and look where it stopped. It stopped exactly at the 1.27 swing of the previous day. So these numbers really line up pretty well for foreign exchange as you're looking at some of these as you go through watching these. Now, there's another market that we have a really strong interest in, which is the gold market, and we are very, very close to what I think is going to be our first good correction in gold here. So if we'll take a look at where we are right now, let's just put this up, because we were talking about the importance of that 1190 level yesterday because of the fact that it was two harmonic vibrations. 34 times 2 is 68. If you add it to the bottom that we made at 1126, you come out to 1191, and that was the high that we made yesterday. So the last corrections that we've had here have all been about $17. So and which is 1/2 of 34. So a $17 correction will take you down to about 74, and that would be a really good, interesting spot to look at it, because that would be a 78% retracement of the low that we made back on the 6th. So what we're doing is we're walking through this as it's made these highs, as you can see, and lows, all the corrections all the way up since December, early December, have been very, very equal. We're right around $17, and each one of them has been either a 61% or a 382 of the previous swing. We've started to increase in movement here, which is good. Now, if we get above the what we call the 1191 level, we need to get it really above close to $1,200 per ounce. Then we've got something really, I think, very important that will be happening in the silver. Platinum is acting very well. Silver's not acting very well, but gold is acting normally. And so if we can get gold above that $1,200 an ounce level, that's going to be, something that is going to be, extremely important, to look at. So we'll take a quick look at that here. And we had a request here to look at something. So if you'll give me a quick move here, I'm going to just bring up, this is the NASDAQ on the weekly basis. And this is the small NASDAQ. It's not the big one here. And we'll put it up. This is the one that I looked at. This is a longer term, but we got up to, I believe, 50.20 or something like that. That was right up against that 1.618. It was in about 10 points of that exact number. And whether it's going to be, the big thing to happen or not, we'll have to wait and see. And but it does look very important up in here, as all of these charts do, from a situation of where we're looking at, prices coming into patterns meeting and stuff like that. So we'll watch this closely, as we always do. Let's take a look here at the gold and silver update. I wanted to just to show you what's happening. Oh dear, I have this in here because I was watching it last night. Shut the front door and raise the rent. Oh, Lawrence, Larry. Okay, give me a break here. All right, I'm not going to worry about that. Let's move on to the U.S. dollar. I want to just point this out because I think this is the key to a lot of these different markets. As you can see, you can't see it yet because I haven't put. I can't put the move in here. There we go. Now you can see the U.S. dollar here with the retracements and everything. We're a little bit stronger today in the dollar, which we should do. We might make a little Gartley here up at this 103 level. But if we get above these old highs at that 103.95 level, folks, that's going to be extremely bearish to the euro. It's going to be extremely bearish to the Mexican peso, extremely bearish to the Chinese renminbi, and very, very bullish to the U.S. dollar. And whether that's going to, ring the bells all across the world or not, I don't know, but it's going to be pretty much of something really important happening. Now, Jeff Grunlack of one of those big hedge funds is saying that if we have the yield get above 3% in the 10-year notes, he said that's going to cause the market to, turn down. I don't know about that because, the interest rates have been going up for 33 years. It hasn't affected the market. Going down for 33 years. And just because it moves up a little bit, I don't think it's going to mean too much. Yeah, I know Bill Gross thinks it's 2.6 and Grunlock thinks it's 3. Actually, I knew Bill Gross. He actually did his first trading out of the Conti Commodity Office there in the Westwood building, McCulloch Oil building back in those early days. That's when he started his business, and of course he was right in the wheelhouse, the sweet spot of starting a bond business, and he certainly did do a wonderful job. He's a pretty nice guy too. He's very, very philanthropic. He just doesn't look very healthy. That's the thing that always bothers me. Okay, let's move on to the next one. We've had a question about someone about the the price of Apple. Again, one more time, I wanted to bring my little tool up here to take a look at it, and we'll click this on. And then we'll see that we've got a really strong probability that Apple's going to hit just shy of 124, around 123 and change. We're trading at 119 and change right now. So that's something that we'll, keep an eye on if it's going to hold that level or not. But it's just a level like any other, is all that it is. Someone's asked a question about the gold market here. Folks, what we're looking at in gold here, the retracement back from the last low that we made, the 78% retracement will be down $17, which will take us down to around the 1176, 1177 level. Watch that. That's about $7 from where it is right now. But anything below that, then you're looking at something a lot more to the downside. But the good part is that we've had a heck of a run here, folks. We've been going up since the 15th of December. See, we've been going up for a month. We've taken out the monthly high. So a normal correction in gold here. And if it's really bullish, let's just put this in here. If it's really bullish, it'll get down to this 1167 level, which is the 382. And that is really bullish. So we'll cover that when we get back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the gold over the last several weeks. As you can see, we made this is a 4-hour chart, by the way. As you can see, we made our bottom down there on December the 15th. We rallied up about $40 a barrel. Well, let's try that, an ounce. And then we backed off to a 38% retracement there on the first trading day of the year in January. And then we went up and we made a perfect ABCD up there at that 1191 level. Now you can see that if we get a 382 retracement of this, which would be down quite a bit, it would be down about $34. You'd be looking at a really nice spot at a 382 retracement. Now, if this is really good, it would take 2 to 3 days to do it, and it should do it in a standard ABCD format, but there would also be a 20-minute line setting there at the same time. So that's the area where I'd really like to watch to see what gold does, folks, because if gold takes a few days to get to 1166, if it does, you don't want to get there today or tomorrow because that's telling you it's too bearish, but if it takes several days to get there, then that means that you've got a shot at something really big, and that's the kind that you really want to be watching, because if they happen, they've got a really good chance of going a long way. But right now, it's a little bit to the bearish side, so we'll take a look at this. Now, this is the next one we're going to take a look at is the silver market, because I think that's been telling us that there's a little weakness in some of the precious metals. As you can see, the ABCD pattern on this same thing in silver, looking at the hourly chart, it went to the 78% retracement, and of course has not taken it out. The profit or the actual ABCD measured to 1705, and we were only able to get to 1696, so it was still 10 cents off. But you can see gold continued to go higher all during the time that silver was struggling up in this area. So we'll be watching these very, very closely, because there's still that possibility that we're going to see something very important. If you notice, there's something about this chart that is pretty important, and that is, if you look at the low on silver, it came in on the 20th of December, whereas the low in gold came in on the 15th. Now, that's not unusual, because these are different commodities. Silver has more of an industrial use, I believe, than gold does. Gold does, the monetary stuff, and of course it's in jewelry and electronics, but I believe silver is more of an industrial metal, and that's just my 2 cents worth, but we'll see what happens then. Anyway, that's what we're watching with this one. We want to watch it. Now, we want to switch our focus here now. We've had a request to talk about one of the markets that we do look at occasionally, and that is the Hang Seng. Hang Seng's had a very, very interesting move here, folks. This is a very important thing to look at, because if you'll notice, we've had perfectly equal rallies at these 707 levels that stopped 2 days ago, and then yesterday the market broke out of that 22,600 level and closed at 22,744, which suggests it was going to go higher. Well, the high today was 23,000, and that was the 61% retracement of the high we made back in October. So, but we've had two very, very wide-ranging bars in here, so that's a very, very positive sign from a rally in a bear market standpoint in the Nikkei. So that's another one that looks very, very interesting. Yes, I agree with you. I don't know why anybody would run for office after what happened in this past election of all the abuse that everybody had to take, and I just don't think that's a good place. Well, it's politics, but I don't like it. You shouldn't say bad things about people, even if they're true. Keep your mouth shut. If you can't say something good about somebody, don't say anything at all. That's my 2 cents worth. All right, and I'm looking for something important, and now I can't find it, and I put it out here to look at it. Shut the front door and raise the rent. Where is it? Oh, dear. See, what I'm looking at is I'm looking at my desktop to find it, and I think I just did. Here we go. This is one of the big markets, folks. This is the Japanese Dow. And as you can see, we went up and we hit the exact 78% retracement about 8 days ago. We backed off a little bit. This market took a big hit earlier in the week. It bounced back just a very, very little bit over these last few days. But until it can get above 19,800, you're not going to, push it very, very far. But you've got to remember that this market is very, very saturated by the buying of the government of Japan, probably pretty much like what we've had happen with quantitative easing, but we'll have to be able to see. Someone makes a question about the fibs being amazing. Yes, they are, but they're not perfect, but they are very, very good. But you have to add them together. In other words, you just can't look at one fib number and make a well, you can if you make a trade, of course, if you're looking at something short term. But if you're looking at multiple fibs, that's the main thing that you want to be looking at. Because when things come together, that's when things happen. When a lot of these cycles, come together, those are the ones that you really like to see. For instance, let's just take a look at the Russell 2000 here. And you'll notice here, this is a long-term chart. Now, this topped several weeks ago. This topped in December up at the 1.27 level. But you'll notice that we have this 1, 2, 3, 4, 5 expanding triangle. And it has held at that level so far. But whether it's going to continue at that level and go higher, I don't know. But, we've got a lot of things going on. We have I don't know what's going to happen with the inauguration. I don't think it'll mean very much. I don't know about these confirmation hearings. But the one thing I do know is, let me see. What are the best winning fib? Here the question is, what are the best winning fib combinations for a trade? Well, it's just what I do is look at these numbers. All you have to do is look at 618 and 786 as contracting numbers. Then you look at 1.27 and 1.618 as expanding numbers. And when you have any of those numbers coming together at the same time, 3 of them, you've got a very good trade setup. If you have them with 5 numbers coming together at the same time, that's when you pick up the telephone and you call Sister Mary Perpetual at the Widows and Orphans home, because those are the types of trades that you want to look at. That's what I'm doing with this trade of the year. This one scares me because I can't find anything wrong with it. That's what's really bad. A lot of times, I always do a T-square, the pluses and minuses of the thing, and I can't find anything on the minus side other than me. So we'll see if it works or not. But if you get a chance, attend the seminar tomorrow night. It'll be well worth your while. I think it'll be pretty good to look at. Anyway, main thing is we want to do is to keep an eye on some of these things because it's very good. As far as the S&P this morning, there's some support down here at the 2255 level. Below that, you got support at 2248. And if on the upside, you got a little bit of resistance at 2268 and some more at 2273. And seeing, you talk about peace on earth and goodwill towards men, Terry. Look at what's been happening in the Middle East. They've been fighting for 3,000 years. Can you believe that? That's just seems amazing to me. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side in 3 minutes.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I'm going to walk through this crude oil because this thing's got a real chance here. This is what we looked at earlier in the morning. You see we had the bottom form, which was the big ABCD Gartley coming in at around 50.90. The low was 50.72, I believe. Then we had the rally up. We had the 40-point pullback. Then we had the ABCD structure to the upside. But look what's happened since that time, which was earlier this morning. We'll just update you with what's going on right now, hopefully, God willing. Well, she's not willing right now, but hold on a second. I know I just did it. Here it is. Hold on just a second. I've got to put these in some kind of format that I can make ABCD out of it, but we'll see. All right, this is what's happened to crude since this morning. Now, these moves are all about $500, which is equivalent to 10 handles in the S&P. And believe me, this has a lot of liquidity, folks. Even in the middle of the night, they have a lot of liquidity. But we've almost rallied almost 80 points off the bottom. And so if we can get this market above the 51.80 to 52 level today, that's going to signal a major bottom is in based on that longer term Gartley that we saw early early in this morning. So that's very, very important. That's this one right here. Let's just remind you that how important this bottom is, because if this puppy fails, it's got some, big problems. So you can see the importance of this level. It was not only a 78% retracement, like you asked the question earlier, Mr. P, about the numbers coming together. You'll notice on this chart you have a 1.618 number coming in from early January, which is very important, and you also have a 78% retracement coming from another level. And all I did was I went down to a smaller time frame, 15 minutes, to see if I could find, a really tight entry point where you wouldn't have to risk anything. But this is a situation where you can see two major ratios, and that's why, Gartley patterns are so very important. The same thing with the three drive pattern, and then also the butterfly pattern. But when you look at a market, going back in a longer period of time, you're going to see swings coming from other areas that are also going to give you some numbers that are incredibly important. And that's the key to trying to limit your risk, is that you put all these numbers together and not risk very much at all. That's the whole key to what we're looking at, and that's what this is. What this is all about. By the way, I got two phone calls. Well, I got one phone call and one email yesterday from students of more than 25 years ago that had participated in some of the trade of the year, and they wanted to know why I was charging this year, and I told them, I said, well, I get so much hassle from it. Even when it's right, I get hassled. So I figure I ought to get paid a little bit. Anyway, Mr. Bill's asking about the harmonic number for crude oil. It usually runs around 88 pips, Bill. Sometimes it'll expand and contract when oil is trading above $100 a barrel. It'll move out to $1.50 or so. But if you start with 88, if you notice this morning's charts in the crude oil, they were running at around 40 pips, which is 1/2 of the 88. So that's where you put your stop when you're trading short term, is at 44 pips. So you don't have to risk any more than that. And of course, the risk to reward ratio is at least 2-to-1. So start and prove it to yourself. Let's go down to a 15-minute chart and see how many times you see these 44 to 50 point moves in crude oil. And believe me, crude oil is one heavily traded puppy, folks. It's it equals the gold market. So it's in fact, I think it's even bigger than the gold market by quite a bit, as I recall. But anyway, that's the number of how you do that. Someday I'll take a break here and talk to these folks about the main thing of this thing. Oh my goodness, there's one I had to put my handle on that one. Hold on just a second here. Oh, what did I do wrong here? Did I put here? Yep, I'm okay. All right, let's go on to the next one that we had, and that was the Treasury bonds. Folks, we've had, this pretty good bottom in the bonds. We're having a little bit of a little tiny bit of a sell-off today, not very much. Just, what is it? It's coming off of like less than 1/2 point so far. So it's still holding relatively good. There should be good support in the bonds at around 152. Anything below that would tell us that we're most probably getting ready, to go a little bit lower. That would be what I would be thinking was going to be happening. So keep an eye on that one. But I think the key one to watch is the next few days is watch this gold market. We're trading at 1182 now, and if we get down to this 1166 level, it's going to look real interesting. But we wanted to get there in a couple of days. We don't want to get there right away. We've only backed off $9 from the high so far. And of course, we're looking for a minimum of 17 on the first move. And then the second part of it would be at 1176. So that's what would be, keeping an eye on very, very closely from the looking at it that way. Now, if we take a look here at the euro is interesting because, we're watching that in relationship, to the U.S. dollar. And we have a really nice 61% retracement coming in here in the euro. Down about another 40 pips down to about the 104.45 level. Watch that one very, very closely also, because this market has been in somewhat of an uptrend, but not enough to make much of a difference. We'll put this one in to let you take a look at it, because it's got a very good pattern for short-term trading, and that's what we try to. We got so many people here in the Tiger Den that do this that we want to give them a chance to take a look at it. And here you'll see it right here. Here again, you'll be able to see the harmonic numbers, how they work. They have some really big numbers here, and we'll see how it goes from this. But you'll notice that on the big move, on the smaller move, 70 pips is the move for the harmonic number in bond, the euro, 70 pips in the euro, and then 2 times 70, basically 150. You'll see that one in there, and then you'll see 2 or even 3 times 150 when the market is really crazy. But we're going to come down at this 104.45 level. It's going to be very, very interesting this morning because of the fact that we've got some very important things that are occurring as we look at this thing this morning, because the dollar index is the key to all this, folks. And we want to watch this 103.90 level. That if it gets above the 103.90, that means the euro is going to break down below that 104 one more time, and it's going to head to par. Folks, it's not very far from par. one announcement coming out of the UK could send it to 100 easy in the euro, because the pound is breaking down. The pound could easily break out that old low at 119, and below 119 you're looking at the 1985 low from the Bretton Woods agreement, which would be let's see, that would be the Plaza Accord, 1985. That would take you to the 108 level, and that would match what we were back in 32 years ago. So these markets are, they're very, very jumpy, and as they should be. There's a lot of things happening in the world with China, Korea, all that's happening in the Middle East, and also with all the things that are happening in Washington. So it's not an easy gig to beat. So that's what we're watching this morning. Hold on one second.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the market up a little bit today. We'll see how it ends today. Remember, we have a little bit of resistance at 2268 in the S&P, and we have a little bit of resistance at 2273 also, but we know we're still near all-time highs in the NASDAQ, so anything could happen from these levels. Remember that the long-term picture in this has some big patterns that are completing at the major areas, like we focused here on the IWM this morning. We looked at that, and we also looked at the composite. So it hasn't turned yet, but it's starting to show signs that there's a little bit of a possibility that we might see some type of a counter trend move after we've had this big move from the election. Because remember, the election, we were down 800 points in the Dow that night. We were limit down also in the S&P 500 momentarily for about 2.5–3 minutes. It stayed there and then came off. But since that time, we've had a straight up move. Remember that there are markets that go straight up have a tendency to reverse and go straight down. We learned this from our good friend Sir Isaac Newton way back in the 17th century. So one of these days, it's not going to happen, but let's keep an eye on it. I think the main thing to focus on for those of here in the room that we like the gold market quite a bit is to keep an eye on this gold at 1166. That's going to be really, really interesting from a standpoint of a retracement level to the 382 and the fact that we would be down right near some 20-minute lines, which would be interesting too. So all of that would be important. As for crude oil, if we can get the first sign is if we get it above $52 a barrel, that will tell us that that bottom that we made last night is pretty significant. Because by then we would be more than $1 a barrel off the bottom, and the shorts might start to get a bit nervous. But longer term, the oil market needs to get above 56 before any sign of being bullish at all, folks. It has been in a downtrend for quite a while, and you really can't do much with it when you're having something like that occurring. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.